Good morning, everyone. First of all, let me congratulate our President Somu for starting the year with an excellent event like this. Hearty congratulations to Thai New Delhi, Lufthansa, and Thai Coimbatore. Friends, India, being the fifth largest economy in the world, with close to $2.9 trillion as GDP, next after America, which has got $23.13 trillion, followed by China, $13.13 trillion, followed by West Germany, Japan, and then India is the fifth largest economy. Second largest in agriculture and food production. Fourth largest in forex reserves. Is being watched by most other nations for obvious reasons. The inflation rate in India, in spite of increasing prices, is around 5.8%, whereas the American economy is facing a huge challenge. European countries are facing huge challenge in terms of inflation. America is facing the highest ever inflation in the last 40 years with 8.1% inflation rate. Therefore, India is a country to be watched. And many companies from China are being shifted to India, India being the emerging superpower in the world in economics. Friends, having said that, India has got a lot of MSMEs. And when we look at the MSME ecosystem, it represents 90% of business and provides more than 50% of employment all over the world. 600 million jobs needed by 2030 to absorb the growing global workforce. An unmet financing need of 40% of formal MSMEs in developing countries with $5.2 trillion. Of course, the global situation for MSMEs always they do not have access to formal line of credit. This is a global situation, not only in India. When we look at MSMEs in India, of course, as you all know, 6.3 crore units producing more than 8,000 products with a share contribution of 30% nominal GDP by MSMEs. 50% of the total MSME operates in rural areas and provides 45% of the total employment. Believe me, 97% of total employment MSME sector comes from micro segment. This is the situation of MSME in India and across the globe. Now, let's look at the challenges. What are the challenges that the MSMEs are facing? The first challenge is on regulatory issues. For example, let's assume if you want to start a small restaurant in Mumbai, you need at least 45 documents with various agencies, various governmental bodies. Whereas if you need to get a gun license, it's only 19 licenses are good enough. This is the situation in India in terms of regulations. And ease of doing business, we have been ranking 131st, and which has come down to 63rd in the recent couple of years. Technology is a huge challenge. Innovation is another constraint that is faced by MSMEs. Then unskilled laborers. 99% of the MSMEs employ less than 10 persons. This is the statistics. And of course, no need to mention about the finance. Because most of the MSMEs resort to unorganized lenders unorganized financiers, which leads to higher cost, which they are not able to sustain, and they do not get the formal credit, line of credit on the due time or whenever it is required. This is a major challenge as far as MSMEs are concerned. So just let us have a look at the fund position now. If you look at it, 16% of the MSMEs only are aware what are all the financial products available, what are the financial availability of financial whereabouts, and bankers' mindset is still on collateral security. Of course, in 2007-8, when Lehman Brothers failed, India could sustain its banking system only because of the robust and strong banking practices that is being followed by our bankers, especially on collateral security. Conventionally, our bankers have a mindset that every loan should be collaterally secured, which is not the case with most of the Western European countries, because there the collateral security is just based on the business and based on the background of the promoters. Slowly the business model is shifting, but still the mindset of the bankers do not shift the way in which the business models shift. So this is a huge challenge as far as the bankers are concerned, and right time you do not get the right amount from working capital or term loan from the bankers. This is another huge thing. And World Bank, through its International Financial Center, estimated that there is a substantial financial gap as far as the working capital is concerned. Only 11 lakh crore is available as against the 3 times requirement. So these are all the practical challenges. So how one is able to come out of this and manage the funds is a huge challenge as far as the MSME is concerned. And as you all know, the definition of MSME has been enhanced. Initially, as mentioned by Pradeep, immediately MSME means people think that it is a small lathe and with 5 or 6 persons working. Whereas now, every company, I would say more than 95% of the companies from Coimbatore may be eligible for MSME registration. Because MSME registration now, MSME limit has been enhanced to 250 crores turnover or 50 lakhs in plant and machinery investment. Therefore, most of the companies are coming under MSME category, which are eligible for most of the benefits and incentives provided by the government and various institutions. Therefore, the MSME limit has been substantially increased. So, it is very, very imperative to understand what are the available sources of funds, what are the available options for the MSMEs to mitigate their financial risks. Now let us just start with the conventional funding system, conventional funding options. When you look at it, just it's pre-sales credit and post-sales credit. Pre-sales credit is popularly called the open cash credit, which is based on your stock statement. Whatever stock you give to the bank on a monthly basis, you reduce your creditors, you have the paid stock, out of which 73% you are eligible to draw, which is known as drawing power. And this is based on the tandem committee norms or Chore committee norms. The bankers used to methodically arrive at it, and then they moved to Nayak committee norms, namely projected turnover based on your projection. Let's say next year you are going to project about 15 crores turnover, then you are eligible for 20% of the turnover, which is 3 crores. This is the Nayak committee now. Now people have moved from there to next level, which we will see in the subsequent slides. Then bills, limit, suppliers credit. These are all pre-sales credit. Then post-sales, which is after sale, it becomes debtor, because your primary current assets are comprising of two major components. One is closing stock or stock in trade, which includes raw material, work in progress, finished goods and consumables. And the other is receivables, namely sundry debtors. Once you sell, you may realize after 30 days or 45 days, depending upon your customer's terms and conditions. So how you have been financing is bills limit. Either your supply, after supply, you discount the bills, or factoring, Kanban factor, SBA factors. They were the major factoring units. These were doing. But then there was huge challenges, because if you supply to an unorganized customer, then which was not accepted by the banker, therefore it was not funded. Then what they brought is the drawing power. They brought stock as well as debtors. So in order to arrive at the drawing power, stock plus debtors minus creditors, which gives you the eligible limit, and they worked on those things. So this is about the post-sales credit. And again, when extending the post-sales credit, how it moves on, what are the new available option is, first is the new avatar of funding, TREDS. I'll just go through each one by one. Let's start with TREDS. TREDS is nothing but Trade Receivable Electronic Discounting System. I mentioned that once you sell the product, you have a receivable. The receivable becomes a current asset based on which you will be eligible to get 90%, 75% to 90% as a bank loan. This TREDS is a platform that connects the buyer, supplier, and the financier. Namely, for example, let's say you supply to Maruti. When you supply to Maruti, Maruti would have got empaneled with the in the TREDS platform, and based on this, the financiers, namely let's say Bank of India or Bank of Baroda or other SIPI, they bid for the debt and they discount it and give the money to you. They release the money. It costs you about 7 to 8% is the interest component. So here it is also like portalized. It is like Uber or other systems. It is just portalized, and then the money is being given to you upfront, and you need to repay it at the later date. It's recourseable and non-recourseable facilities are there. Just in a broad level, many people are not aware of it. Also, to mobilize this or to motivate this, government has also come out with a new scheme in terms of amending the Income Tax and Companies Act, that a company which has got more than 500 crores have to necessarily register with TREDS, which means their suppliers should not suffer. Therefore, they have to come here and do it. This is about the, and also, of course, as you all know, for protecting the MSMEs from non-payment from governmental agencies or big corporates or bigger companies, they have come up with several schemes. One such major scheme is the MSMED Act. Section 23 of MSMED Act says, if the payment is not made within 45 days, then 3 times of the bank working capital cost, interest cost, let's say if you are paying bank 28% means, you need to pay 3 times, 24% should be paid to the MSME suppliers, in case if you are not able to meet the payment within 45 days. This is a major move brought by the government. And this is not governed by Finance Ministry, this is by MSMED Ministry. They are managing this. This is one aspect of this. Then the other thing is the interest that is paid by income tax also supplemented this. The interest amount paid by these big companies for delayed or defaulted amount to the MSMEs will not be allowed as expenditure under Section 37 of the Income Tax Act. Therefore, this government has taken a lot of steps to protect the interest of the MSMEs, and they are focusing, as we have seen, they contribute to the employment, GDP, export. 40% of more than 40% export is by MSMEs. Thus, they are bringing out all-out efforts to bring in protection, insulation to the MSMEs. So this TREDS is another platform. It is an important platform. And of course, RxCL. There are 3 types of popular platforms. One is RxCL. RxCL is promoted by SIPI and NSE. And the other one is InvoiceSmart, Axis Bank, then M1. These 3 are the popular TREDS platform. When we look at RxCL, just for the sake of just an example, we will see it as RxCL, how it works. Best discount rate due to the participation of multiple financiers in the auction, then efficient capital deployment happens, and timely receipt of money. You don't really need to wait for a long time or run from pillar to post. And cost and paperwork reduction, everything is portalized. It is just like a Uberization of working capital receipt. And definitely increased transparency, because most of the MSMEs are in the trap of the private lenders, and they end up paying huge interest rates. Thereby, their profitability is taken away by the financiers rather than other people. So this is one area one needs to look at in terms of receivables management. Then the second item that I thought I could bring it to the attention of the people is SME exchange. As you all know, for listing, whether you go to BSE or NSE, and the cost is very high, and you have a huge threshold limit in terms of, in case if you want to go public, as you know, the private limited company, public limited company, again, public limited company, either substantial public or substantially interested or closely held. When you want to go for public, raising money from the public, you have to go through the banking channel, exchanges, and SEBI is the controlling authority, regulator, and then MSE or BSE is the way to go. But to provide an impetus for the SMEs to go to the public, they have introduced SME exchange, which has been there for the past few years. And not many companies have opted for this or are aware, not aware of it. This is an area where you can go into it because it got a lot of advantages. For example, first is credibility and visibility. In terms of when you go for public, then credibility and visibility increases. Then collateral of shares. For example, collateral security is a huge challenge now, as far as the MSME is concerned. As far as the banker is concerned, they insist for collateral security, be it SIPI or be it any other nationalized bank. So when you go to the public through this SME exchange, your shares become a collateral security, which is not known to many people. So this is something, a huge advantage. Then there is a reduction in interest rate, because when you are going to the public, you are being monitored by SEBI and other agencies. Therefore, the bank, it gives a lot of comfort to the bankers. Therefore, they reduce interest rate also substantially by 1% or 0.75 to 0.1%. Then the other main advantage is automatically, once you are listed in SME exchange, within 3 years, you are entitled to be upgraded to the main board, namely MSDS, be a Bombay Stock Exchange or National Stock Exchange. You can automatically go. Then the other advantage that we have worked out with several of our clients is it works as a family settlement. For example, when the next generation comes, generally the problem is in allocating or in dividing the assets and how business is being divided. Let's say they have only one brand. How they divide the business, how they divide, because 3 families are involved. First generation, all brothers, they have no problem. Next generation, they do not want to, they want to settle among themselves. So the typical model is when you go and unlock the value in terms of SME exchange, then your share price like Reliance or HCL or HUL, your shares are like a tradable commodity. So that's much easier to allocate the shares and divide it. So these are all the advantages of SME exchange. And of course, the post face value not to exceed 25 crores. This is not a big huge amount, because the 25 crores face value is absolutely, it's a doable thing. Then the cost is very less. I would say about 40 to 50 lakhs is just cost for the SME when you go for SME exchange. Then the condition should be the company or the unit should have 3 years profit, and share allotment should be 1 lakh per lot. Reason being, only informed investors should invest. That's the reason why they are kept as 1 lakh per lot. And of course, naturally 100% return, underwritten, and net worth 1 crore. So very simple. Again, valuation and other things, one need to plan and work it out. So this is another model. SME exchange is another option that the SMEs can pick up. Then the next one is PLI scheme. As you all know, during COVID time, post-COVID, many governments came out with different model of distribution of stimulus packages and other distribution system. Whereas India, we did not resort to printing of notes. In fact, the reason why America and the European countries are facing inflation challenges because they printed notes and distributed. So too much of money chasing for too few goods automatically will increase the cost of goods, thereby inflation cost. Whereas India took a different route, but then there are so many criticisms that India should go for printing, if not now, when? That was the question of the opposition parties. But still the government thought it prudent not to print currencies. Instead, they announced schemes. If you recall, 5 different schemes were announced. The Atmanirbhar scheme, 20 lakh crores was the amount that was laid down by the government, and 5 different schemes, out of which 3 lakh crores was the emergency line of credit guarantee. Most of you would have availed. Whatever was the limit outstanding, you got 10 or 20% more than that. This was the limit given by the government, given by the bankers, and they were able to collect it. So one of the popular scheme was PLI, production linked incentive, because when the Chinese companies were shifting to India, government thought it prudent, make in India should be made stronger, and then a lot of investments were invited to India. And to incentivize them, what they did was they identified 10 different sectors like automobile, electronics, textiles, 10 different sectors For them, they just gave an announced scheme that gives them an incentive on the incremental sales. For example, last year you did, let's say you did about 82 crores, and this year you did about 182 crores. For the incremental sales of 100 crores, incentives were given, incentives were announced. It ranged from 6% to 12%. But only thing, they had threshold limit. It was not meant for everyone. This 100 crores or plus companies were only getting, and only mostly North Indian companies they availed it. But then recently, the government has come out with the distribution of PLA scheme to the smaller companies also. Textile is being worked out, and it is in the process. So this is another scheme where one can work out on the PLA scheme, availing this PLA scheme, because even one of the clients in North India was mentioning, even the profit margin was 3%, whereas with PLA we were able to make an additional 4.5% in electronic industry. This is the situation on PLA scheme. Then coming to the next is MSME's Innovative Championship. This is a recently rolled out one where the MSMEs, three items have been synergized, unified and converged into three sub-schemes. One is innovation in incubation, the other is design intervention, and the other one is IPR protection. These three are brought in together, and then MSMEs are given, because these three are generally looks like a startup facility. Startup and MSMEs always go together. It is not that startup means it is only, as I think Pradeep mentioned correctly, startup is not meant for youngsters, and MSME is meant for those who are looking for working capital, those who are struggling and without working a term loan or without funds. Definitely, both the schemes have to be looked at simultaneously. Just simple difference, I would say. Why startup was given focus is, like conventional in these industries, for conventional industries, bankers are comfortable in lending the money. For example, if you have a lathe or if you have some machinery, you have a primary security in terms of lathe or other equipment. When the banker, his mindset of 4 or 5 decades, always when the payment is not coming forward or whenever there is a default, he can sell it, auction it, sell it, and they can collateralize the balance amount and get it done. This is the mindset. Whereas for the startups, it is more on technology, portal based. Portal, of course, it is absolutely invisible mode, therefore bankers were not willing to give money. That is the reason why startups were given a lot of priority by the government, but both go together. And startup has got a unique feature of being scalable at any height. So, in my opinion, startup and MSMEs should go hand in hand, availing most of the benefits. So this MSME are innovative incubation, design intervention, IPR protection. So when we look at the incubation component, the host institutions, incubators, are provided with the fund of about 15 lakhs per idea and nurturing with up to maximum 1 crore they can give. Capital support was given by the government, and they can nurture many of their members. Incubation. The design component, this is for the person who are starting the company, who are just starting, the MSMEs that are eligible, they will get about maximum 40 lakhs with 3 stages. One is strategy and concept 40%, detailed designs 30%, and successful completion, final report submission, another 30% they can get the money. Even for student design project, up to maximum 2.5 lakh rupees is being given. On application approval, 50% is given, and upon the final report, they are given 50%. This is on design component. Then the IPR component, intellectual property right. As you all know, this is the most important thing, emerging one in India, and grant of up to 1 crore to an IPFCs, and reimbursement of patent and trademark and designs being given. Different levels of assistance are being given on IPR component. And this amount is foreign patent 5 lakhs and domestic patent 1 lakh, GA registration 2 lakhs, and this marginal support also being given by the IPR. This is on the innovative funding scheme by MSME by the government introduced recently. In addition to this, you have got a lot of government schemes and subsidies. As I mentioned, MSMEs are eligible for a lot of benefits and schemes. And of course, as I mentioned, the collateral security is a huge challenge. The government has come out with 3 schemes. For example, up to 10 lakhs. Let's say you want to start a company or unit, Up to 10 lakhs, the government can give, the bankers are authorized or bankers are given, empowered to give without collateral. Mudra scheme. There are about Sishu, Tarun, Kishore. These three schemes are there, up to 50,000, 50,000 to 5 lakhs, 5 lakhs to 10 lakhs. These three schemes are available for the startups, which includes service sector also. Then when you want to go up to 1 crore, 10 lakhs to 1 crore, you have got Stand Up India scheme. Stand Up India scheme for women entrepreneurs also, women entrepreneurs, just more than 51% is the promoter, is a women promoter with a stake of 51%, then you are eligible for this Stand Up India scheme. And the popular one is CGTMSE scheme, Credit Guarantee Scheme, where the government is giving the guarantee through the trust. Bankers are given comfort up to 2 crores without collateral security. You can go for either term loan or working capital. This is CGTMSE scheme, which is a very popular one. And of course, there will be a lot of resistance from the bankers. It is for you to convince the banker and get the money, because they do not want to be accountable. In banking system also, even after he retires, CBI calls him for previous witness or as included as an accused. Therefore, bankers are also not comfortable, bank managers are not at all comfortable in terms of extending the CGTMSE scheme. But then you are absolutely entitled to CGTMSE scheme. And recently, if you have, I do not know how many of you have undergone this, SIPI and Google, they have come out with a collateral-free loan. And SIPI is offering an additional one, which is up to 5 crores, there is no collateral scheme. So you have, all that you need to have is idea. Just have an idea, then people are willing to lend you money. Only thing you need to know which door to knock and how to knock, when to knock. This is the important thing as far as the collateral free loan is concerned. Then Prime Minister Employment Generation Program is there, subsidies are there. Then CGSSD, subordinate debt. Probably you would have seen during COVID time, for the stressed assets which has gone to NPA or which is a stressed asset, the government came in with a 15% participation in your equity. This is CGSSD scheme. Then credit linked capital subsidy scheme, 15% on your investment. They come up to 1 crore rupees. They gave it as a subsidy when you start a new unit. And SMILE is a program by SIPI and Google SIPI, I mentioned. Then coming to startups, MSME, just all that you need is just you have to get registered under Udayam portal, MSME registration. Then you are entitled for all these schemes. Then when you look at startup you need to get registered with DPIIT, Ministry of Technology, and startups. Once you register with startup, you are entitled for a host of incentives and other developed benefits. Major one is self-certification. With 6 labor laws and 3 environmental laws, you are not supposed to, you don't need to go to the government offices for every department. Instead, you can give a self-certification if you are registered here. Then IPR protection, you are given 80% reimbursement, intellectual property right, you are given 80% reimbursement. Then public procurement policy for startup units. Those who are registered with DPIIT, they are given public procurement policy, meaning the governmental companies, the government public sector undertaking need to procure from them only, like MSMEs only. You need to procure only from these companies. That kind of reservation is also available as far as the startup registered companies. Then the most important popular one is income tax. There is no income tax for the first 3 years. You can choose the 3 years for the first 10 years. Then there is no capital gain when you sell the shares. Startup, let's say you are able to give an exit or you are able to sell your shares after some time. 54BB, you don't need to pay any capital gains tax. Then the other one is angel tax. For example, if the shares are subscribed by the investors more than the fair market value, you are supposed to pay capital gain, you are supposed to pay income under section 5627 of the Income Tax Act as other income. But then last couple of years back or year before last, Finance Minister has modified it. In case if it is DPIIT company, if it's startup registered company, then angel tax is not applicable. Therefore, this is a very important one in terms of income tax. Then of course, Ministry of Companies Affairs also, there are a lot of changes. No need to conduct board meetings once in a quarter. Instead, you can have lesser number of board meetings. Then 25 lakhs can be brought in as convertible note. This is a new concept for startups. Then ESOP, up to 50% you can provide ESOP. Then sweat equity capital can be allotted to the promoters. These are all the few examples that I have listed on startup community. The startup and MSMEs always go together. Then I thought just 7 common errors that one should avoid as MSME owner. What people make mistake, and one first one is no ABC of financial taxation. As a business owner, you instead of depending on your auditors or accountants, you should know the basics of financials, basics of taxation. I don't want you to go into the jargons, because this helps a lot of decision making and also business life. If you notice, in few states in North India are known for their business acumen because of their financial knowledge. And statistics says 67% of the businesses that have succeeded have got the promoters with financial acumen. 82% of the business that fail lack business acumen or financial knowledge by the promoters. This is the statistics that they say. Then the stitch in time saves 9. This is course correction. Whenever, just how many of you see the financials on a quarterly basis? Generally, people see the financials only at the year end when the auditor calls for filing the income tax return, or when the banker insists you to provide the bank financial statement. One looks at the financials. Whereas it is more than that. More than that, it is based on the, for our own financial health, we need to look at it. Then, cost of non-compliance is more expensive than cost of compliance, and low-hanging fruits are not being tapped. And you are not many of the promoters do not explore all the funding options. For example, the 115 BAB1 section was introduced in 2018, which talks about for new manufacturing facilities, the tax rate is only 15%. Many of the people have not utilized this. The 15%, even in Singapore it is 17%, US, when they brought it, it was 21%, now it is 35%. So this is the tax rates are elsewhere. Whereas in India, they are able to bring it at 15%. It is never in the past, and it will never be in the future also. These are all the small items that one needs to be aware of and make use of it. And diversion of working capital, of course, as you all know, analyzing your financials and receivables. So the crux is know your financial options. You have several options, and think big, aim for the star, at least you will reach the sky. This is the saying. So there are several options, and try to optimize your funding resources. With this, I once again thank TAI Coimbatore, President Somu, TAI Delhi, Lufthansa, for the wonderful opportunity. Wonderful seeing with you. Thank you very much. If you have any questions, probably time permits, 1 or 2 questions I will take.